Hello, viewers. Welcome to Sensor 360 Investor channel, where we use best practices from around the world and the companies that we invest in, apply that to the investing process methodology. If you haven't subscribed, if I may ask you to please do so. Okay, within our 360 view framework, today's focus is on indexes. I haven't done an index update for a few weeks now because the markets generally haven't done a lot, and there wasn't too much to say. But it's time that we did an update as we start to close out the year. Okay, so the topics today will cover the markets. We'll go through the S&P 500, S&P sectors, and then I've added a slide for funds, and I'll rotate this across different 401k offerings. And then we'll finish up by taking a look at the index models and see what they're telling us in terms of whether we should be invested in the 401ks at this stage or not. Okay, before we begin, a quick word about the disclaimer. The channel's not providing financial advice. Please pause, read, and then continue. Okay, so without much further ado, let's begin the show. All right, so I've shortened the slide deck on the major US markets just to take out the noise. And these are the main ones that we're interested in, just to get some general guidance anyway. So the first on the left-hand side is the Dow Jones, and we can see the Dow Jones came through over, this is a 1 year time frame. Has been dropping all year, put in a low in October, and since then the Dow has actually started to show some strength. It's knocking on this prior peak and it's just hanging out there. So we'll see which direction the Dow Jones wants to go. But remember, this is only 30 stocks and the large blue chips. Moving over to the slightly broader end, the benchmark index, the S&P 500. The S&P 500 is still at this stage, locked in its downtrend. We're still getting lower lows, lower lows, lower highs at this stage. So we've had a little rally from the October lows, but it's kind of beginning to show some stalling action, as is the Dow Jones over here. Then if we look at the broader NASDAQ, we can also see the tech-heavy NASDAQ is still pretty much in a downtrend. So we have this low down here, but we made a slightly higher low here, so maybe it's starting to digest. And then the small caps, that's measured by the Russell 2000. Again, we can see a little choppy, but still kind of locked in. Now this is actually locked into more of a digestion, so it's starting to form a kind of a trading channel box. So maybe the Russell 2000 is starting to change its direction, and instead of continuing to go down, it's starting to digest and go sideways. So there isn't a lot of divergence in the markets at the moment. The overall, we're still looking at predominantly kind of a downtrending bias. And then a 1 year view on the sectors, we can see clearly energy of the past year has been the place to be and has significantly outperformed all the other sectors. And the next best one being utilities. And then, we also have staples and healthcare. So very much still a defensive look here. And then this is going to be interesting as inflation comes down eventually. And if we do head towards a recession, then energy will get impacted. And then these may move up. And if we take a look at the same sectors, a slightly different view, this is a bit more of a shorter time frame, 2 months. And if we look at the strength versus the markets, we can see utilities over the last couple of months has come to the top, followed by healthcare, which is still locked in a short-term uptrend, as is the staples. So these three are your classic defensive sectors. And then we've got a couple of the industrials, real estate. These are kind of more cyclically type oriented. And then we get down to technology's actually moved up a little bit. Maybe the bounce that we've had and the fact that rates are not going to move up as aggressively may have had a impact on also the dollar coming in a bit. And then we have the S&P down here. So everything up to the left and above this box is outperforming the S&P, and then everything to the right and below it is underperforming. So down here we see communications. Energy has dropped quite a bit. Energy was running at the top for a long time. A bit of discretionary. So you certainly have like technology, communication services, and discretionary, which are your kind of classic growth areas. So overall, the picture remains defensive, I would say. So let's have a look at these three. These are mutual funds and our offerings within 401k. So I've got on the left-hand side, and this is a one-year performance. On the left-hand side, it's the value ETF, so value stocks, and then we got the growth stocks here, and the small cap stocks here. So we can see that value is actually, by the end of the year, the value is actually held up pretty good. It's only down about 3 to 4% from the size, whereas growth has obviously suffered quite a bit and is still locked in this downtrend. Maybe trying to bottom out here. And then small caps too have had a bit of a roller coaster ride. Some large bounces, rallies, and pullbacks. So this low here is slightly higher than here. So there may be a possibility of a turn in the small caps, and we saw that in the Russell 2000 as well. Okay, so so if you weren't invested for the entire period, you would have certainly missed this drawdown and missed this drawdown. As of now, you'd be okay in the value one, but you would have been down quite a bit as of the October lows. And since we're picked up, it remains to be seen what happens in the months ahead. So what does this all mean in terms of the model that we have? So in our generally in our 401k model, it's red, so it's still saying cash is king. And then our two time framed 401k investing models, P, if you have more than 20 years between now and your retirement, and then M, if you have less than 20 years out there. So all three remain red with the markets kind of where they are at this stage, and just continue to build that war chest and dry powder. Okay, so that is the index update and the 401k update, introducing the funds. If you haven't already done so, please subscribe. If you like this, please give us a thumbs up and share with your family and friends. If you're inclined to, please leave a comment. And I will see you next time on the next video. Thank you for watching. Thank you for listening. And goodbye.